how do you maximize investment in cloud? You look at ERP. So ERP, cloud implementations and upgrades, these are huge opportunities for tax to really realize the benefits of tax-sensitized data. If you're designed and configured properly, the ERP really represents once-in-a-generation opportunity to streamline and automate data at its source, which is huge for tax. These initiatives, these ERP cloud initiatives, look to capitalize on standard functionality where possible and leading practices. And so there's huge benefits for tax and sort of feeding into that model. And why now? I mean, if you think about it, many companies, like we've talked about, are moving to the cloud. There's likely an ERP implementation on the horizon if it's not already planned at your organization. And really, we view these ERP transformations as the backbone for tax transformation. So with that, you think about the strategy and the playbook for tax. What we see is it's critical for tax not just to have a seat at the table, but to be proactive in really all stages of the ERP cloud implementation. It starts with understanding the IT roadmap. So what is the timing for the ERP update? What other initiatives are on the horizon? Are areas like forecasting, planning, and reporting being addressed? Being proactive in these planning activities with finance and IT. So participating in vendor selection discussions and being proactive in phase 0 engagements. Part of this is identifying your big rocks. So what are your key areas of focus for direct tax, indirect tax, transfer pricing, identifying existing pain points, identifying automation opportunities, and feeding into the broader program. I think ultimately, you want to think about your business case and quantifying ROI. So understanding and documenting benefits, feeding into the broader business case, advocating for tax budget for ERP cloud, and also other tax softwares that may be impacted. And finally, I would say never too early to start mapping out your data requirements. The earlier, the better, all in the spirit of being proactive.
How do you start to change that mindset within tax and start to get them to think about all of the additional opportunities and areas of focus that they need to be thinking about within ERP, but then how do you make sure that they're really at the center of what's going on as well?
Yeah, thanks, Tom. It's a great question. And we believe that tax should be at the center of any ERP cloud migration. There's a number of benefits for tax if you think about the single source of the truth. So having tax-sensitized transaction level data, the opportunity to design GL detail to really enable that downstream automation of book to tax adjustments, and setting up master data that drives key tax calculations. If you think about tax-sensitized ledgers that support your provision and compliance processes, local ledgers, including statutory and building and local requirements within the implementation, legal entity financial statements, and having a chart of accounts that's optimized to really increase downstream automation to the extent possible. You think about your consolidation process, defining your consolidation needs, creating tax hierarchies that really mimic the tax reporting structure within the consolidation tool, getting more visibility into eliminations and legal entity trial balance detail that you need for reporting. Transfer pricing is another huge area. You think about legal entity profitability and the ability to really drill down into product flows, to perform powerful analytics, to monitor your intercompany flows, and to ultimately automate transfer pricing adjustments. Indirect taxes, I saw the survey question earlier in terms of thinking through how cloud impacts indirect taxes. If you think about the ERP cloud initiative, it's really an opportunity to define your end-to-end indirect tax operating model, tapping into master data set up for tax determination and reporting, and thinking through the benefits of a tax engine to drive some of that determination and reporting. Fixed assets, another area, if you think about the opportunity to streamline data from multiple sources, dealing with inconsistent data types that you can now standardize, the opportunity to evaluate pros and cons of using an ERP versus another tool, and to set up master data to facilitate depreciation reporting. Other key areas just to hit on quickly: withholding tax and your end-to-end global withholding tax process, thinking through how to leverage standard functionality to enhance that process, statutory reporting and being aware of the enhancements that can be made from a statutory perspective. We talked about R&D, but leveraging the ERP system to facilitate some of that data collection up front. Forecasting process, another big area to focus on in terms of what's going to be included, how is the forecast going to be addressed, and then your provision process. So understanding the impact of changing data, how is that going to impact your tax provision tool? Is there an opportunity to enhance or update your tool to refresh your end-to-end process? So these are just some of the areas, some of the benefits, which should really be tied into your business case, and really critical to understand, how an ERP cloud implementation could help automate or streamline some of these areas.